Revision 7, the cash budget. This is question 3 in the financial statement exam, and you can get an E8 from this one question, so it's worthwhile having a really good go at it. Cash budget, first thing, the purpose of it. The whole idea of the cash budget is this little bit down here, is to calculate what our closing bank could be at the end of the month. So what we're trying to see is, have we got enough cash on hand at the end of the month, or are we going to have to take some remedial action? So obviously a really important thing for businesses to do, particularly if you're applying for a bank loan. They want to see if you can pay back your loan. So we've got the rules, next here are around what we do when we're coding. So at the start, you'll be given a lot of transactions, and you're going to write next to them R for receipt. That's an estimated receipt, which will come into this section. A P for estimated payment, which will come under this section, or neither. And if it's neither, if it's not cash, we're going to cross it out. It's going to be things like invoices, owner taking stock home for themselves. That's going to be things like depreciation, loss on sale. Anything that's not cash, we're going to cross out. We're not going to use it. Next thing is we've got to convert everything to a month. In the question, normally it says assume 4 weeks in a month. So if it's weekly, you multiply by 2. If it's fortnightly, weekly you multiply by 4, and fortnightly you multiply by 2. And lastly, account name only. So we don't have bank fees, received or cash or sold. These names here are the ones that will be in the trial balance. So we get our estimated receipts. These are money coming in. So we're going through anything we've got R next to, we write the word and the amount. And then estimated payments. These are the things that we're paying money. Cash is going to go out of the business in the future. So we write the account name here. And the amount, remember, we may have to multiply by 4, particularly things like wages. You'll see also that there are some things in there that are not in the income statement. Like we might have the sale of equipment. It's how much cash we're getting for that sale of equipment. We might have things like purchasing a new vehicle. So Tom's Trucking bought a new vehicle. Drawings is a cash drawings and repayment of loan. At the bottom of it, we've got our estimated money coming in, our receipts, minus our estimated money going out, our estimated payments, and that gives us a surplus or deficit of cash. A surplus is if receipts are higher than payments, deficit's the other way around, and like this one, payments higher than receipts. And so our bank account's going to go down by 9,700. Add that to what we have at the beginning of the month, 5,400. Tells at the end of the month, this business, Tom's Trucking, will have negative 4,300 in the bank. So they might want to do something about that. If I'm looking at it, I can see that they've bought new vehicles here. That probably should be funded by an increase in loan. You're not asked to comment on that. You're just asked to do the cash budget. Enjoy the Kahoot. Ka kite.